Hey everyone, welcome back. Okay, so today, this Thursday, is going to be the most important Thursday for 2022. So far, let's see what happens in February when the CPI data comes out. But this CPI data will set the tone on how the markets are going to react. We are looking for that one number, and I'm going to share in a detail about what I'm talking about. But that one number, if it comes or the CPI data comes below that, then we are ready for a rally. If the CPI number comes above that or at that, then we have to wait a bit longer. As I was going through my research and I was reading the articles, it was such a confusion about what to look for when the CPI data comes out. Us investors, what should we look at? So I'm going to share a quick article with you, and then I will give you my opinion on how I'm playing the CPI data. So let me actually go ahead and share that article with you right here. Okay, so now if you see, is this it? No, that's it. Okay, so this is a Bloomberg article that I was reading, and of course, consensus is that the CPI data will come out around 7.2% as you see over here. So it says CPI to climb to 7.2% may peak in February. Now, this is a very important point, and this is the number that we are looking at. So pay attention to this. I'm going to read some of the lines over here, and then I'm going to show you a chart and then a news article which I read in Wall Street Journal that's going to connect these two together. Okay, so the article reads, we project a CPI reading of 7.2% right here year over year in January, with a slower monthly rate compared to the previous month. This reading may not be the one that will deliver an upward surprise needed to tip the Fed's hand towards a 50 basis point hike in March. So this is the question here, that when the CPI data comes out, is the Fed going to increase the interest rate by 0.25% or 0.50%? And that's the uncertainty that market has. Now, market has factored in about 5 interest rate hikes, 3 to 5 interest rate hikes in 2022 by the Fed. So that's already priced in, and the price action we saw was already there on that news. The question is, what is Fed looking for? So again, as the article says, that this CPI data may not be the CPI data that Fed will make a decision on, because we have one more CPI reading that's going to come out, and based on that reading, Fed is going to decide if they're going to raise the interest rate by 0.25% or by 0.50%. But there is an interesting point in this right here. Okay, so take a look at this chart, and I'm going to read the rest of the article in 1 second. So this is a chart that talks about the peak of inflation that we can see right now. So Bloomberg is projecting that January inflation is going to be 7.2%. But February inflation right here, as you can see, right here. So the yellow line that you are seeing is for the January, and then you can notice right here that February is actually going to be a little bit higher. They're projecting about 7.3% inflation that's going to come out in February, which is going to be higher than January inflation. Now, 7.2% will be the highest inflation since 1982. So this is a big number, but February number could be even worse. So what am I looking for? This is what I'm looking for. So pay attention to this white area that you see. So the white area right here is new and used vehicles, lodging, rental cars, vehicle insurance, and public transit, food away from home. So the white area is what kind of defines inflation in many ways. And then we have core inflation. Core inflation we know is very high. If you go to the grocery stores, you can see core inflation. I mean, everything is through the roof. The gallon of milk, I'm paying almost $1.50 more than what I was paying just a few months ago. So absolutely there is a issue, or I would say the core inflation is going through the roof. But then when we are talking about the inflation over here, which is used car, new cars, we can see that this number has really changed. The used car and all the other inflation really took a lead and kind of makes majority of the inflation here. The other inflation is energy. Look, energy cost is through the roof as well. So these two makes majority of the inflation in terms of spike in the inflation. I read an article in Wall Street Journal yesterday that Ford and GM have threatened their dealers to reduce the pricing or not surcharge the customers. Because what's going on is, if you go and buy the car right now, and they're blaming it on supply chain issues, not getting enough material or enough inventory from the dealer or from the manufacturer, that's why they're raising these prices. But if you go to a Toyota dealership or a Honda dealership, you are paying almost $2,000 to $5,000 more on top of MSRP. They are not allowed to do that. The MSRP is set for a reason, but dealers can because of the supply chain issues, and they're blaming it on supply chain issues. So the article on Wall Street Journal yesterday, which you can go ahead and take a look yourself, is that GM and Ford are threatening the dealers that if you do that, we are going to cut supply for the new models for next year. So I think we are going to see the used cars and also the new car, because if the new car prices, they're not surcharging, the used car prices will also settle a little bit, because people will be like, you know what, for 5,000 more I can buy a new car versus 10,000 more I cannot afford a new car. So I think what's going to happen is that, and this is the number that I'm looking for, if the inflation reading comes to 7.1 or anything below, not going to happen, very, very unlikely. But if the inflation reading comes out to be 7.1 or 7.0, highly unlikely, then the rally that we are going to see, it's going to be real. It's going to be real in terms of then I will be interested in buying in this. I haven't been doing any buying. I have some money on the side that I'm not spending. I'm just waiting for this market to kind of decide which direction it wants to take. So that's what I'm going to do, and that's what I plan on doing. That if the inflation reading comes out to be around anything less than 7.2, I will jump into the market, because I feel in February the reading will be better than January if the January reading comes below 7.2. Now, if the reading comes out to be, I would say 7.2 or 7.3, God hope not, but if it does come out to be 7.2, then I'm going to wait, because we are going to see very, very volatile market for the next few, I would say, weeks until we get the February reading, because again, market is not decisive on which direction it wants to take, because in February, right here it says, right here, I'm going to read another line here. This reading may not be the one, right here I'm reading, so you might not see it very clearly, but I'm going to read it out to you guys. This reading may not be the one that will deliver the upward surprise needed to tip the Fed's hand toward a 50 basis point hike in March. The February print, which the FOMC will get about a week before the March meeting, could do the job. We expect inflation to peak north of 7.3% in the next inflation report, depending on the behavior of energy prices and supply chain in the next few weeks. So the February, I would say, reading is much more important than the January reading. But if January reading comes below 7.2, then we know that February reading could improve. Because what I'm seeing in the grocery stores, yes, there are supply chain issues, but it has gotten better. A point in January where everything was off the shelf because of the Omicron fear, people were not showing up to work and they were scared. All that has subsided a little bit. Look, we are lifting mask mandates. We are doing so much more. Disney, look what they reported. This is amazing. This is good news, actually. For the first time since the pandemic has started, I really feel we are getting out of pandemic. The Delta, or before Delta, the whole thing in 2021, it felt like fake because everybody was just so eager to get out, but there was no, I would say, indication or true signs that, hey, is pandemic over? Now we have the pills and also the vaccines, the boosters, the two variants, I feel this is a real sign that we are going to get out of pandemic. Just a small story about Disney. So I'm taking my family to Disney World in end of March. And everywhere, all the hotels I have looked at, they all are booked. Can't even find a single hotel in the Disney property. We have to stay away out of Disney property because everything is fully booked. People are traveling, people are flying. I have 3 business trips scheduled and everybody wants to meet now. Everybody wants to have a meeting. So I feel that we are going to see an amazing reopening place and money is going to come back into the growth stocks depending on the inflation. January numbers, if they come out anything under 7.2 or anything less, I'm going to rejoice and I'm going to actually get into the market. Anything above 7.2, if it comes out to be 7.2, I'm going to wait because I feel February around that time is going to be highly, highly volatile. Of course, there are some names. I mean, I'm playing a big bet on Tesla for February 22nd, and I'm going to actually share that with everyone. But the numbers for February inflation, which is going to come out in March before the meeting, is going to decide how the market or which direction market is going to take turn if the CPI data that's coming out today at 8:30 will give us 7.2 or anything higher. I hope you enjoyed the video, and for more content like this, consider subscribing and hit the like button, and for more one-on-one conversation, consider joining our Discord and Patreon. Links are in the description. Always pleasure to share all of this with you. I really hope you all have a sparkling day.